Hey everyone, this is DayTraderRockStar, and this is a market update video for June 26th. That'll be a Wednesday. Doing this late night, but I always find that it's always better to do research the night before. It really gets you prepared for the markets, and it's something I think I slacked over last week, so I'm trying to get back into the groove of things with some late night research, and going to do my best to get that video update to you multiple times a week, if not every night here. And this is something that I wanted to get going here. So actually, I would like to get a section on the new dashboard where we're going to show some of this. But let's just jump right into this. The S&P here pulled back again. We know why it started. A lot of fear in the market. A lot of people talking about it. Extended pullback in the market, and definitely seeing that that negative tape over the last 4 days, really. Today was a bounce, a nice bounce, and yesterday actually we showed some good strength, and it all really started. And again, we're going to talk about an interesting level, but it all started on Thursday when we did have a beautiful setup. And again, I happened to and sometimes I would feel weird about it. I feel great about it because so many times that I find really good important parts in the market. Usually I would say long-term to medium-term bottoms I usually pick out in the market, and that's based off of the, a lot of the indicators lining up. And we've seen those. And then when we talk about long-term, we're not talking more than a couple days, but we talk about like when we start to see a significant rally that lasts more than a day. We love to find those areas, and I think we've kind of found one just off. And again, we could just take that little pivot area here. Lots of times the chart is harder to read. You're saying, well, why am I not taking this pivot area and this pivot area? Well, really, it's about the lower low that kind of violated this channel here. So once you establish that lower low, then you can start using that as a pivot. And there was a tighter channel here, a very tight channel. I would consider that breakdown, and we got to push a retest back up to it basically. And then from that point on, we failed and dropped back. But this is a proper place for this pivot area. And you can see if we extend that lower trend line, we actually hit here, and then we just extend it out, and I tell you, to the point, basically to the point, we bounced off of that. Now this is representing the SPY, which is the ETF for the S&P 500. It's really the same chart. It's just a cleaner chart here, so I show you on the SPY. The important factor is here now is the 60-minute chart is getting close to being overbought, and that's definitely my main concern. Even though I do have a gentleman's bet with with Costa Rica out there that the market actually pushes back up above what are we the 95 area, 1595 in 2 weeks, and I'm going to stand by that. And some of the reasons are basically, the reaction, the overreaction that we've seen on this little. It started with Bernanke's comments. Then we kind of pushed the blame over to China. Now China seems to be clearing up. Bernanke's fallen back into the woodwork. So what does that leave us? I mean, there's some more bad news, and that's exactly what I think this market trades on now is news. And you have to be careful of that. I don't think if we don't get any serious bad news, I think this market continues to push back up. And you take a look at that daily setup. You're just possibly getting that crossover here. We haven't retraced back up to the 20. There's a lot of potential here, and a lot of stocks are actually, underlying stocks have shown those bottoming patterns, which makes me believe that there's definitely some possible upside left in this market. Now, worst case scenario, I think, and another thing, I think it was just too easy to get this pullback. This pullback seemed way too easy just based off what everyone was focused on. So I expect these people that are jumping on this to probably get shaken out on the next push higher, and people will be on the sidelines scratching their heads asking why is the market moving higher. It's because everyone expected it to move lower. The writing's on the wall, right? Bonds are selling off, interest rates are going up. I mean, it makes sense. So we'll see. We'll see what the market actually wants to do. But technically speaking, I pay attention to that 60-minute chart, and I advise you to do the same. It gives great little signals, and that signal is getting very close to being overbought. So we do have the possibility of some more upside tomorrow. And, again, take a look at the SPX here. Let me put down my mic a second. I got my new laptop here, and I'm practicing now. See, the problem with the SPX, it gives me these false candles. So this candle, not at the end of the day, was really not even there. I'm just going to get rid of that data point. That adjusts that. But you can see You know, we're not oversold. Well, we're not overbought at this point. We could have some more upside, but that 60-minute chart, as you will see in a couple stocks that we're going to review right now, that 60-minute chart is so important to look at your short-term trends. And I know most of us out here listening to this are worried about more of the short-term time frame. I mean, do we want to, does it move back down here? Is there a possibility? Yes, there definitely is. There's definitely a possibility we could break down. I'm going with a little, call that there was a little too much negativity over the last release, and I want to see if we actually market tries to push this a little bit higher, taking the road less traveled, so to speak. SPX. Let's take a look at a few stocks, and then we'll set this video on its way. Agilent, something I am in. Wanted to show you just a couple of fast charts. I'm just doing this freehand with you. The downward channel, that's what I marked out here. We're holding this 200 period moving average. Take a look at this. Look at how this stock pays attention to the 200 period moving average. This is a daily chart. All right, look at this. Look at this spot there. I have to push the button each time for this. Come on. But you get the drift, right? You're seeing what I'm seeing here. You're starting to see that each time the 200 period moving average has been tested, we kind of pulled back off of it, and we broke through it. And then look what happened here. The opposite. We held on to the 200. We held on to the 200. We held on to the 200. We're right back here now. Where do you find the change here? Is it after 4 or 5 attempts do we break out? Is it that we're going into our 4th attempt? Is there another attempt here, another bounce? If it acts, and again, this is just looking at statistics. If it acts something similar to this, where each time we push up against it, we bounce. We bounce 1, twice, 3 times, 4 times. 4th time we chopped around. We're in 1, 2, 3 times, 4 times. We could get the breakdown there. It's not saying that we can't. But what I do like here, I do like that the stochastics here are trying to cross back over. We're ready to go on this. I don't like the embedded stochastics, but we're ready to go. And this thing is holding that 200 period moving average. I think if we start to get moving back up, we're good to go. And like I said, this stock will even help the market. AMD, don't usually talk about it. I've been following it. Got into it. Haven't been in this in a while, but just look at this. It's just so much strength here in that $4 range. And we started seeing a nice crossover today and took a shot on us. I want to see if we actually get some follow through and we kind of get a breakout here. Looks like something's up. We mentioned Harmonic on the show today or the other day, and I forget his name, Eric maybe? I don't know. He works for Fox News. We were hanging out at dinner. He was talking to me about Harmonic and how the Fox has such a big deal with them, and they're supplying all their video and tech stuff. So Harmonic is actually selling a lot of stuff, and he had, he didn't know anything about that. It had a stock. I said, "Oh, I know that stock, HLIT. I used to trade that back in, Jesus, it seemed like 15, 20 years ago almost. But I don't know. It wasn't a while ago, and so looking at the chart right now, seeing such a very strong chart, I was like, oh, this is really too good to be true, So we'll see if this guy's right. I mean, he's giving me the signal that he doesn't know anything about the stock, but he tells me about, I'm a tech guy because we do this show, so I'm always asking about video and stuff. And we got to this video conversation. Next thing you know, he's like, this company Harmonic is supplying us with all the video coders and everything. We use those, and they're getting business. Or I'm like just going through my head. Let me check out the chart. Check out the chart. Chart doesn't look any better than it could be. This is what I would love to see in a chart. A slow pullback here. The stochastics kind of just drifting down. So we call a stochastic price positive divergence. You got kind of sideways action, and this is going to pop up. This is going to pop up, and this one's going to take off. HLIT. I like this a lot. Big time. Big time. You put that out there. Take that to the bank. Coca-Cola. How could you not be in Coca-Cola down here? Off the 200 period moving average, off of the trend line that's been tagged multiple times, the third time. 4-day consolidation on the 200. I tell you, another good stock that hasn't crossed back over yet. Just starting to cross back over. Do we have a trip up here? And if we do have a trip up here, back up to overbought levels, that's definitely going to put a nice mark on this chart to the upside. And that mark on the chart right now, could bring us all the way back up to this trend line. That's not a stretch. That's not a big stretch at all. That's not a big stretch at all. So loving this setup on Coca-Cola, loving it too. So take a look at these. What does this tell you for the underlying markets? It's applied materials. Look how fast it's rotated back down. It's starting to give us a Nike check mark. When Nike check mark is an area when the stochastics here kind of just, the signal here just kind of K-line just checks right back up and rips. And when we see that, it's usually really good follow-through strength. Here was a big one. And we kind of got that here, that checkpoint. Again, some little things like that I pay attention to, and I make my own studies out of it. I'll mark down and remember all the stocks that gave me a checkpoint versus a flattening of the stochastic. So I know that embedded stochastics after 3 periods usually, bring on the weakness. I know the checkpoint usually gives a multiple time frame rally. In this case, the daily time frame. So it's important to learn each. You do it long enough, you just start to recognize it. Qualcomm, QCOM. Again, off of its nice crossover, big pop today. And again, what I wanted to show you here is just to kind of recognize that 60-period moving average. Even though stocks are getting bounces here, nothing has really changed to the downside. That's what I'm still saying that my friendly bet is more of a psychology type of basis, not really based on technicals, because technicals we could move a little bit lower, well, just based on basic market sentiment and what the general consensus is looking at, and I'm looking at which way the market wants to go to take out the majority of the people. Right now I do feel we have a good shot of actually pushing a little bit higher. So, but anyway, the 60-minute chart is going to be the main indicator. Right now, the 60-minute on Qualcomm showing a pullback. You see the last hour of the day, we did get that pullback and started crossing back over. So important to listen to those levels. I stress it all the time. I don't always follow it myself, but if you go back and just constantly talk about it and see it happen, if you said, all right, oversold, I better be, it's probably more advantageous because we got to pull back from the 20 that to go long here. We have a lot of things. And then if you start to see those trend lines play up and you see the multiple indicators, next thing you know, you have all these little things that are lining up. You have this underlying trend line. You have the oversold stochastic, and you say, oh, look, the trend line is oversold. Oh, you know what? Looks like a channel. It's a recognized channel. Bingo. You have a 4-day move up. It doesn't get too much. Well, you know what? It might not get too far, but it goes in the direction that's predicted to go. And as you see that breakdown, you just recognize it too. It's not that every single is going to have a defined move and stuff. It's basically the momentum, and when momentum is shifting, and the better chance of that momentum shifting either to the long side or to the short side. In this case, Qualcomm. We'll see what happens tomorrow. LLY, Eli Lilly, stock that's been crushed. Still a good stock, but I think there's something with their generic drug or something like that. Definitely broke under that 200. We're oversold. I like it down here. I'm starting to pick it up. Looking for a bounce. And not much else I can say about it. I said I'd watch it tomorrow. I have it on the list for today to be a focus stock for tomorrow. And I'd watch for that 2-day breakout, kind of an inside day pattern. And I like that the daily is oversold. The daily is oversold. The 60 is grinding up, but nothing really exciting on it. It almost looks like it has a potential for a gap up or gap down because of the just a tightening of the pattern here. This tends to look like a negative divergence when you have the stochastics pushing into an overbought level and the price going sideways. So when that goes, this goes up like this, and then this goes sideways. When this gets a little overbought, it drops down, and then the next thing you know, this is falling off and just breaking down of consolidation. So something to watch. Dollar General, inat. Why not be in Dollar General? I ask you that. 60-minute chart. Beware. I was upset today. We had such a nice run, and then it actually did sell off a little. And kind of I think was it Dollar General or was Qualcomm where we predicted, but you could see the well, not bad. Let's see. 5-minute chart actually giving you nice little swings. They're not big, but maybe 10, 15 cent swings based off of that 5-minute setting. Then from there, we go to the 60-minute chart, and you can see that 60-minute chart now kind of getting a little extended. Nowhere near taking out the divergence, nowhere near breaking back out of this. Not getting through this level up here yet. So looks like the stock has a little work to do. And the daily is interesting. The daily has this underlying trend line, which we love, holding that 200-period moving average for the second time, which is also good. So, little mixed signals on the 60 and the daily. Overall, the daily kind of trumps the 60 in the long run. And Dobie, I think you pay attention to Dobie right on the lower trend line, upward trend line, right on it. Good stochastic setting, kind of coiled up. We have a series of lower lows and lower highs, but kind of bouncing. And when you have that bounce coiled up area, we tend to get a bigger move out of it. And when it does move out of it, when you get oversold at the bottom part of it here, like here, that's usually the place you need to get to make the biggest move. Now, just remember this kind of coiled up down here. You can recognize once it makes 3 or more humps to the downside, once it gets down there, there's a better chance of the extended move when you break out versus these little moves. Now you see these little moves that are happening right now here and then here. But you have a pretty extended move, and that's basically off that. So here again, we're setting up here in Dobie. A little different of a setup here because I don't trade it that often. We're going to see if we actually bounce off this trend line. I like the lower trend line also. I think it's a pretty good hidden one. I don't think many people are paying attention to it. So we start to push up off of that. And that's it. That wraps it up the watch list. I just want to get a fast one out for you. Just some focus for tomorrow on June 26th, Wednesday. I'll talk to you guys in the morning.